Do you want to know why the media is pushing China? Do you want to know why the Evergrande nonsense happened? Do you want to know why no one knows what the F they're talking about? It's because no one looks and reads the underlying documents. I've been saying it this whole time, and it still remains true. Let me show you. All this money that's been sitting in the repo market, do you know where it's going? It's going right back where it came from, China, and nobody's looking. Talk about a once-in-a-lifetime opportunity. It's been staring us in the face for, going on almost 2 years now. So, as a reminder, August of 2020, this was a critical component as the 3 red lines was initiated for China. Now, remember, this was right after COVID, like the depths of it earlier that year. This was right after SLR started in March of 2020. So, just as a recap, what do the 3 red lines mean for developers? In short, forced deleveraging, as in you are going to be forced to sell your assets. Against this backdrop, and with the imposition of the new rules, they expect that developers may respond by cutting prices to boost sales and asset turnover, controlling their debt growth under monthly supervision by the central authorities, seeking operational cost efficiencies, disposing of assets or stakes in businesses not related to core property development. We also expect that many smaller developers will be forced to move out of the industry and that the sector will become increasingly dominated by Fidelity, BlackRock, Vanguard, and all the other large players that we know and love so much. What are their ETFs called? Emerging markets. What does the word emerging mean? You should Google it. Anyways, the 3 red lines in the China credit outlook. We believe the new policy is a positive market development for bond investors in the long term. From a valuation perspective, we believe current levels are highly attractive in the real estate space, explaining BlackRock buying up housing and many others. With structural improvements in the pipeline as the 3 red lines have an impact, we believe now is an excellent opportunity for bond investors to benefit from the re-ratings that we detailed above. Because again, what has the United States been doing for China? Building them a bond market. Why did they kick the swap reporting requirements to 2023? Because they didn't want anyone to see that. However, it's already noticeable because that's where the money's going. So, with structural improvements in the pipeline as the 3 red lines have an impact, they believe now is the opportunity for bond investors to benefit from the re-ratings that we detailed above. Nevertheless, the impacts will be uneven, and some developers may fare better than others in a tightened credit condition next year. And at the time of this article, they wrote this at the beginning of January. So they were literally outlining our entire 2021 for us. China is tightening up some financing channels after opening them at the height of COVID-19 outbreak. And coupled with the introduction of the 3 red lines, China's developers will be under pressure for the next 12 months. This was written in January of last year. That 12 months has passed. China plans to relax the 3 red lines. This is coming out. The reason I posted this article is because remember Metzler, the guy pushing Evergrande via Reuters? Yeah, his own company goes against his own narrative. So that's interesting. So the 3 red lines, I think, and the data shows January 28th, the same day as the Chinese New Year, restrictions were lifted. Because what happened this Monday? China went titties up and kind of has been ever since. Now, China New Year is also started on January 28th. It's a very long holiday. It's not 1 or 2 days. It's a couple of weeks. I think the markets are closed until February 11th of this month. So what will they be doing during this time? It just so happens that was when the buy button was taken away. So what were they doing then? Was it really related to retail and GME and AMC? Or was it more related to something like this? Let's follow along in the storyline. So, just taking a snippet of, this is iShares, BlackRock, holds all of the ADRs for China that were spun off illegally by Goldman and Morgan Stanley to avoid margin calls from Archegos, which happened in March of 2021, right before SLR expired. Coincidence? Doubtful. Now we're going to morph this over the SPY. Everything is tracking pretty damn close. Pretty damn close. That red line there is entering into SLR period. And then we get into our next period, the time between SLR and when the 3 red lines policy begins in 2020 August, which is represented by the white line on the right-hand side. So here you have SLR starting. Here you have the Chinese 3 red lines policy being implemented. This is the SPY. This is the MCHI. Everything's still tracking. All is good. All is good. Same time frame down to the pixel. We have SLR beginning, March of 2020, 3 red lines, August 2020. Next segment, we have I think that may have been the same picture. Let's go back one. No. Okay, so this is the 3 red lines starting. And then this is April 1st, 2021. So it should still be tracking each other. That's the SPY. This is the MCHI. Now, hold on. You have a lower point here and a higher point there. You know, maybe leverage related, yin yang, whatever. Now, they've been tracking closely this whole time, right? Through COVID, through SLR, through SLR ending, through the 3 red lines. The 3 red lines is still active here. And then this red line that we're coming up on now, April 2021, this is the repo. This is when the repo took over after SLR ended. So now look at the next segment. We have the SPY. I'm sorry, this is the MCHI and the SPY together. Did you see that little cross section there? Let me go back one. You see as it's morphing? Where'd the tracking go? They're a little bit different, aren't they? That is the problem. That is the problem. Is that divergence. That is where the money's going to be going. There's no other mismatch than these two. And that's on it for a pixel-to-pixel basis. I mean, look at that shit. You go all the way tracking until you get to the repo where China doesn't have a bond market yet. And then guess what this line is here? The 3 red mother effing lines policy ending the same day as the Chinese New Year began. You tell me. What do you think? Yin yang or what? This is the SPY up top. This is the MCHI down below. I think what's going to happen, this is the full picture now, is between this line here, which is the 3 red lines ending, this line here, which is April 2022, we're going to see them meet back together, at which point I think, based on what I saw and what I'm seeing in the data, I guess I have to find out. There it is. All the time, right there. Togetherness until the repo. Then it just completely diverges, and it has never done this before.